Welcome to the deep dive. Okay, how do we even begin to figure out this world? I mean, it feels like it's changing so fast.
It really does.
You've got markets hitting highs 1 minute, then massive geopolitical shifts, tech revolutions popping up constantly. It's almost too much.
It's a lot to track.
So today, we're diving into a stack of recent insights. We've got market commentary, geopolitical analysis, really digging in.
Yeah, deep sources.
And our mission, really, is to pull out the key nuggets, the surprising facts, to help you get quickly up to speed on these, well, pretty complex forces shaping things.
And what's really striking when you look at this material is how interconnected it all is. Things that seem separate, they're usually not.
Totally.
Our sources offer these perspectives that, often challenge the standard view. They highlight these shifts underneath the surface that maybe aren't getting enough attention.
That interconnectedness is absolutely key. But, looking at the big picture, the macro view, it seems like a lot of people are maybe missing some big things. What's a key blind spot our sources are pointing to right now, especially in the markets?
Well, it's interesting, isn't it? Because you hear all this sort of dooming and glooming, right?
Right.
Lots of smart people saying, get market insurance, but then markets are hitting new highs.
Yeah, it feels contradictory.
It does, and our sources mention that old saying, buy hurricane insurance when the sun is shining.
Ah, okay.
But the big blind spot, the thing equity investors seem to be, completely overlooking according to our sources, it's the U.S. 10-year bond yield.
The 10-year yield. Okay, for someone maybe not watching bond yields daily, why is that so concerning?
Well, it's the technical setup.
Yeah.
The charts, the patterns analysts look at, they're just not reassuring.
Not reassuring how?
They're seeing signs of a potential breakout. Think of the yield being stuck in a range for a while, a sort of consolidation channel. If it breaks out of that channel upwards, that points to much higher bond yields, significantly higher.
And if bond yields jump up like that, what does that actually mean for, say, my investments? For the average person?
It's a big deal. If the cost for the government to borrow money, that's what the 10-year reflects, goes up sharply, it can reprice basically everything.
Everything.
Pretty much. Higher yields make existing bonds less attractive, sure, but they also make bonds look better compared to stocks. Plus, it raises borrowing costs for companies hitting their profits.
So it could hit stocks hard.
It could hit stock portfolios hard, yeah. Tech stocks, real estate, our sources are saying many investors just aren't ready for that kind of shift.
Okay, speaking of things people aren't ready for, let's pivot a bit. Geopolitics. Our sources talk about the Trump effect. Max Hastings, the historian, he suggests Trump is unique, causes this specific kind of global anxiety. He even calls world leaders plane crash neurotics, just constantly worried about what he'll do next.
And the examples really underline that unpredictability, don't they? Look at Ukraine.
Right.
After months of seeming, dismissive, suddenly Trump announces new air defense systems, long-range missiles are going over, purchased by NATO allies, interestingly.
And he says he's disappointed by Putin, but not done with him.
Exactly. It feels very personal, doesn't it? Less purely strategic, more reactive. It makes long-term planning incredibly difficult for allies and adversaries alike.
And there are immediate effects too, right? Our sources mentioned Russian oligarchs, for instance.
Yeah, apparently getting more leeway to do business in the U.S. and the agencies meant to be monitoring them being shut down.
It definitely makes you question the consistency or maybe the motives behind some decisions.
And economically, it's just as uncertain. You've got top economists like Martin Wolf calling Trump's tariff ideas crazy.
I saw that.
And this deliberate uncertainty around the Fed, Jerome Powell, attacking Powell again. Mohamed El-Erian, someone who really understands markets and global finance.
Yeah.
He basically says, I have no idea how this plays out.
Wow. When someone like El-Erian says that?
It tells you something, right? It's a level of economic unpredictability that's really quite rare. Makes planning very tough.
So here's where it gets, I think, really fascinating. El-Erian warns other countries, corporations too, they need to fight active inertia.
Active inertia. That's basically doubling down on what used to work, right?
Exactly. Even when the world's changed and it doesn't work anymore. So he's saying, look, build up your own financial defenses, become less dependent on the U.S., make new connections.
Because the U.S. might not just snap back to being that reliable partner.
Might not ever snap back, is the implication. The world's sort of holding its breath. And it's not just politics, it's hitting fundamental business decisions, national strategies.
And connecting that back, it really shows this massive shift in global power dynamics, this push towards strategic autonomy for nations, which makes you ask,
What does it mean for investing? for asset allocation. If your reliable anchor suddenly becomes unpredictable.
Precisely. And we're seeing direct pressure examples, like the threat of 50% tariffs on Brazil unless they drop charges against Bolsonaro.
Which one source called a dictator protection program.
You can imagine how Lula responded to that. Outrage!
And Europe's caught too, isn't it? Facing terror threats over regulating U.S. big tech social media content.
Yeah, will the EU actually use its anti-coercion instrument against the U.S.? That's a huge question. It's designed for economic blackmail, but against America. With clear terror threats on the table, it's a real dilemma.
Then there's the Middle East. Iran's nuclear program. Is it talks or bombs?
And the sources bring up how Netanyahu perhaps suckered Trump into conflict before pulling out of the Iran deal.
Right, in 2018.
So the question now is, will Trump's view on Netanyahu shift, like he says his view on Putin has? It's just sheer unpredictability, making global decision-making incredibly hard, forces everyone to rethink alliances, economic ties.
Okay, so let's shift gears again. From that global uncertainty to the digital world. Our sources, particularly Nutstuff, see a huge mispriced opportunity here.
Yeah, an emphatic belief that the whole crypto or digital asset space is the mispriced one.
And the numbers are pretty wild when you put them side by side.
They really are. A total market cap of maybe $4 trillion compared to global assets. What is it? A quadrillion. 1,000 trillion.
It sounds tiny in comparison.
Especially when you consider there are already a billion digital wallets out there.
A billion users, essentially.
That scale versus that market cap, it's a huge disconnect. And the sources also point out that Bitcoin's dominance, its share of the market, is actually decreasing. Money's flowing into Ethereum, ETH, and other alts.
Which is seen as healthy.
Yeah, positive for the whole ecosystem growing. And this isn't just theory anymore. Decentralized infrastructure, it's actually happening.
Like real-world stuff.
Exactly. Things like Helium, HNT, building decentralized wireless, or Solana powering DIPins.
DIPins. Decentralized physical infrastructure networks.
Okay. Yeah, basically using blockchain for actual physical things. Telecoms, energy networks, computing power. Some sources are even speculating. Could the next Mag 7, the next group of giant tech companies?
Could they come from crypto?
Could come from, like, 5 to 7 blockchain protocols that are tied to this real-world physical infrastructure. It's a totally different way of thinking about building things.
Moving beyond just software.
Right. Which brings us to understanding money itself. One source argues, pretty bluntly, that most people simply don't understand money.
How so?
They think in terms of denominations, you know, a dollar, a pound, not the system behind it. They just assume fiat, government money not backed by gold or anything physical, is the default, the only way.
Okay.
And that's why things like digital dollars, whether it's CBDCs, stablecoins like Tether, even using your Visa card, our sources call that a shallow upgrade.
Just a new interface.
Basically, a UI update on what they call a decaying system, because that system is still opaque, you need permission, it's inflationary, it's steered by politics.
Got it. So how does Bitcoin fit in there?
Bitcoin's presented as something fundamentally different. The first, genuinely collateralized money.
Collateralized by what?
By its own properties. It's known issuance, we know exactly how many will ever exist. It's censorship resistance, the fact you can hold it yourself, self-custody. And its scarcity is built into the code. The protocol enforces it.
So it's not based on trusting a government or a bank.
Exactly. It's primitive in some ways, yes, but our sources call it pristine because of those core features. And the endgame thesis they talk about, it's that BTC-backed money is already starting to happen.
Well, where?
Look at Tether holding massive Bitcoin reserves. Public companies like MicroStrategy essentially acting like Bitcoin banks. You've even got Bitcoin-denominated bonds popping up in places like Luxembourg and Switzerland.
Wow.
It's described as a bet on the collapse of trust in the fiat abstraction. A bet that people will want something verifiably scarce and outside political control.
And Ethereum. People often lump it in with Bitcoin, but the sources say that's a mistake.
Huge mistake, yeah. They stress Ethereum isn't trying to be Bitcoin, not trying to be a better money.
So what is it trying to be?
It's building a new digital foundation, like the underlying rails for how data, value, identity, how all that moves online in the future. Think of it as a global decentralized computer.
Okay, so less like digital gold, more like digital infrastructure.
Exactly. The sources paint this picture where maybe in 5 years you won't consciously go on the internet, you'll just be using networks built on Ethereum without even knowing it.
How would that look?
Your bank might be rebuilt using smart contracts code that executes agreements automatically on the blockchain. Your online logins could be secured with an on-chain ID, tying your identity cryptographically to the chain. Apps running on rollups, which make Ethereum faster and cheaper.
It sounds like a complete paradigm shift.
It really is. And according to these sources, a lot of people just aren't seeing it yet. But look at BMNR, an Ethereum custody company backed by Peter Thiel, aiming to buy 5% of all ETH.
5%? That's huge.
If ETH hits, say, $10,000, BMNR could have a market cap around $60 billion. That shows you the scale of institutional interest already moving in.
So if you put all that together, the potentially outdated asset allocation models, the idea of Bitcoin replacing bonds, what does it mean for how we should think about investing? About safety?
It really suggests a fundamental rethink, doesn't it? A reevaluation of what a safe asset even is in this potentially decentralized future. How do you preserve wealth when the old rules might not apply?
Let's shift again to tech sovereignty. China comes up a lot. Nutstuff, one of our sources, has this strong conviction. A 15-year mean reversion for China.
Yeah, believes it is and will play out, and the advice is pretty counter-narrative. Do business, not war, with China, because of their, quote, unlimited power.
And that view is shared elsewhere.
Jacques Maxon, another source, echoes this. Urges investors to pivot strategically away from potentially stretched Western markets towards what they see as undervalued Chinese stocks.
And Nutstuff is acting on this.
Apparently buying into Hong Kong property, the KW Web US Tech ETF, individual Chinese stocks. And crucially, China's making this big strategic push with RISC-V chip technology.
RISC-V,
Yep.
That's the open source chip design.
Exactly. China's investing heavily, aiming for technological self-reliance, positioning itself to potentially be the true 21st century leader in chips, independent of Western tech.
It's fascinating, this tension between those grand ambitions and maybe the on-the-ground reality. The FT had that headline, "Can Europe break free of American tech supremacy?"
Right, this whole theme of tech sovereignty.
And the sources use that historical parallel. Clyde built ships from Scotland, once the best in the world.
And now, the only commercial ships built there are 2 ferries, years late, way over budget, and apparently leaking.
Ouch. The suggestion being, could that happen to U.S. tech dominance as things evolve?
It underscores how fluid tech leadership can be. It's not guaranteed forever, which leads to questions about, well, innovation versus practicality.
Like Elon Musk's ideas.
Yeah, like carbon capture. But then Ken, one of the thinkers we follow, has this kind of cheeky response. Why should humans fix carbon when trees already do it perfectly well?
Haha, fair point.
And maybe AIs like Grok will soon be smarter and more efficient than us anyway. He even jokes about Grok having its own DAO treasury, issuing tree tokens to forests hitting carbon targets.
Okay, that's thinking outside the box.
Yeah.
But it makes you consider how tech might reshape solutions. What about Starlink to phones? That sounds huge.
It sounds huge. And direct-to-cell is clever tech, letting standard phones connect, but it's not mobile broadband, not even close.
What are the speeds like?
Our sources say expect maybe 2 to 4 megabits per second up, 418 down. Latency, 30-70 milliseconds. Okay, but not game-changing. And the real issue is reliability. Especially in cities or indoors, signal gets blocked easily. You need line of sight to the satellite.
It's no sky, no signal.
Pretty much. Great for remote areas, emergencies, absolutely. A replacement for regular mobile networks, no way.
So some hype versus reality there. But who is leading in AI, according to the sources?
Google Alphabet really stands out as a key mega cap player. Strong earnings, sure, but look at Gemini users, 450 million monthly active users.
Compared to ChatGPT.
Which has around 200 million. And Sundar Pichai emphasizes Google's presence across the whole AI stack, from research to apps, plus their distribution advantage.
Everyone uses Google for something.
Right. 1.5 billion potential users already in our ecosystem may be willing to pay, say, $100 a month for AI features. That's a massive head start in consumer AI.
Okay, let's bring this closer to home, maybe a harder look at reality. The UK economy, healthcare costs, the numbers you mentioned earlier are, frankly, startling.
They really are. They paint this picture of a country genuinely at a crossroads, rhetoric versus reality.
That projected government spend. 1.3 trillion for 2025-26. How is that sustainable?
Well, the source suggests it isn't. Borrowing $143 billion this year, but spending $111 billion just on interest payments for existing debt.
Wait, so over 3/4, 77% of new borrowing just covers interest.
That's the projection. It leaves very little for actual investment or services.
And the welfare state, costs rising much faster than the economy is expected to grow.
Projected 26% rise in welfare spend in 5 years. versus maybe 8% economic growth. The conclusion from our sources is blunt. It's reform or crisis.
It forces you to look past the headlines, doesn't it, at the real structural problems.
Absolutely. Whether it's national finances or, as we'll see, public health.
And tied to that fiscal picture, there's this sentiment in the sources about political language. Bullshit baffles brains, as one put it.
Yeah, the idea that as performance disappoints, the rhetoric gets grander, more absurd, claiming to be a green energy superpower, science superpower, defense superpower.
To mask the underlying issues.
That's the suggestion, a disconnect between the messaging and the delivery, leaving people trying to figure out what's real.
And finally, let's talk healthcare, because one insight was genuinely surprising and pretty impactful.
The role of Encarfido, well, being overweight. FAT, as the source puts it bluntly.
A terrifying amount of healthcare costs linked just to that.
That's the assertion. Think about common conditions: diabetes, heart disease, joint problems, orthopedics, and all the knock-on effects.
They'd be much less severe or less common.
So much less if humans are less FAT, is the direct quote. The market, it seems, prices obesity almost as if it's an optional lifestyle choice, not a core driver of massive healthcare spending.
But now there are these new drugs, the GLP-1s, like Ozempic.
Right. And they're seen as potentially revolutionary. One doctor quoted says the benefits of taking all the bad health outcomes of being overweight off the table, they just dwarf any potential risks of the drugs themselves.
So this could fundamentally change things.
It could lead to a generational and secular change in fat-related support spend. Imagine freeing up the vast sums spent managing obesity-related illnesses. It could totally reshape healthcare spending and priorities.
It really makes you think about the links between public health, lifestyle, and national economics in a very direct way.
It does. It pushes us to think critically about these deep structural issues, not just the surface noise of markets or politics.
Wow. We've covered a huge amount of ground today, journeyed through this incredible stack of sources. Layers of insight you definitely don't get in the average news update.
Absolutely. From global power shifts, the nature of money itself,
to the stark realities of national budgets and even public health. So much to chew on there.
And when you try and connect all those different threads, it really hammers home one thing. In a world changing this fast with so much information flying around,
Critical thinking is key.
critical thinking and being willing to question your own assumptions, the things you just accepted as true. Which, I suppose, leads to a final thought for you, the listener.
As you navigate your own life, your own decisions, how much of your current understanding is built on those kinds of inherited assumptions, things you've just always thought? And how much is actually built on a real deep dive into the underlying facts, the shifting realities we've talked about here today?
Disclaimer. North Breach Limited, Nutstuff trading name, is an appointed representative of Messels Limited, which is authorized and regulated by the Financial Conduct Authority. Nutstuff has made every reasonable effort to ensure the information provided in this communication is correct. But Nutstuff makes no representation nor any warranty as to whether the information is accurate, complete, or up to date. To the extent permitted by law, Nutstuff accepts no responsibility for any errors or misstatements, negligent or otherwise. Nutstuff, its associates, officers, or employees may also have interests in the financial instruments referred to in this information by acting in various roles. The information in this media is confidential. If you are not the intended recipient, you are not authorized to use the information in this media in any way. Nutstuff does not guarantee the integrity of any media or attached files. The view or opinions expressed are the author's own and may not reflect the view or opinions of Nutstuff. Electronic communications carried within the Nutstuff system may be monitored.